is buying up all the Silicon Valley homes. We'll look into that as well as commercial properties still continue to crash. And we'll look at the luxury home of the week and the 12 Bay Area County market report. Let's get moving here. Let's see. Let me put this here so it's a little bit bigger for you. First, I want to go over this. This is super commercial property. This is a hotel, and they're going into trouble as well. It's just another thing to look at. And you might be going, well, but you keep on picking on the southern states. Well, I don't know. I see it all over the place. I see them in New York. I see them in San Francisco. I see them all over. This guy just happens to pop into my feed, and I send it to myself so I can at least show it to you. The link is down in my blog. The link to my blog is down in all of the comments. So please make sure you take a look at it. Why is it important? Because it's one of the cards within our house of cards. It's the stack that is keeping our economy up and floating. And if that collapses, which we say it is, along with the automotive market, as well as all these other things, something to be aware of. I'm not saying that the sky is falling. I'm not trying to be a crash bro. I'm just saying something to be aware of. It might help you understand where we are in this real estate market that we are. Speaking of the market, who's buying all the homes in the Silicon Valley? People with stock. People that work at high-tech firms, they're opting to take their 6% gains and put it into real estate and get 12 to 15% gains. It just makes common financial sense. When you have homes that are going up over 10% value every year, it's just a smart place to put your money, which is why you have more competition. Remember, I always say you have institutional buyers, you have mom and pop buyers, you have home buyers that are buying up real estate. Institutional buyers around here, you don't see a whole bunch of because it's easier for them to buy $300,000 and $400,000 homes versus $1 million home or a $1.5 million home. Or in our case, in Santa Clara County, we're at $2 million. So if you buy a house for $2 million, yeah, it's going to increase 10%, but you don't get to buy as many houses and you can't control the market. And institutional buyers aren't there just for the equity. They're there to control a lot of other aspects of owning homes in one area, one region, one town, or even one development. There's a whole lot of other reasons to it, and I've spoken about that before. So it's just something to be aware of. Here, we're seeing people that are affluent. They have a ton of money, and instead of buying the $6 million home, they're buying multiple $1 million homes or $2 million homes, watching their equity build that way. And it's nothing you can do about it. It's just part of life. There's certain regulations that they're trying to put out, like you can only write 3 contracts. I don't know. There's all sorts of stuff. It's not going to help the problem, right? And here it says the median price has gone up 7.1%, but I can tell you that if you look at the averages in specific areas, it's gone up 10 to 15%, especially like Palo Alto, Mountain View. Those places are not hurting at all. Whatever gets put on the market gets taken up pretty quickly. On the east side, where you see less affluent buyers, they're struggling to buy $1 million homes, but it's still a struggle because when you don't have the money, it's a lot harder to buy homes, obviously, right? So this guy, we can read about this guy. I don't really want to talk about him too much, but median home prices they say it's at 1.95. It's actually less this week. It was at 1.7. But on the average over months, you're looking at $2 million. Or San Mateo is much higher because there's more affluent buyers in San Mateo because that's where all the BC money is. Willow Glen house of the month, not my listing. It's 2-bedroom, 1-bath, 1,300 square feet, built in 1939. It's a little bungalow right here, a bunch of joy. It's a trustee sale and it just got put on the market. So 4 days on market. And there you go. Take a look real quick. Looks like they did some improvement to it. They fixed it up, but not a whole lot. Original kitchen, original bathroom, old pergola out there that needs to be taken down. There you go. Okay. And then this one is $1.8 million for a 2-bedroom, 1-bath house in Willow Glen, San Jose, California. There you go. This over here. There we go. That's a little better. Today's luxury home of the week. Again, not my listing. This is a mere 18,000 square feet, 8 bedrooms, 2 half baths, built in 1920. Might have been an original. I don't think it was 18,000 square feet in the original, but what do I know? Maybe it was this little tiny hole right here. I have 147 pictures. Are you really going to sit back and watch 147 pictures of a house, even though it's worth $68 million? Providing value, but really how much value is there? It's been on the market 58 days, guys. when you're trying to be a market maker. Look, it was 58 million, now it's 68 million. Isn't that awesome? Agree to some people. Well, maybe they were in contract and it fell out of contract. And then they got a contract for 68 million. Like, screw it. If you're going to buy my house, this is what you're going to buy it for. And when you have $68 million in one home, you're not struggling. So you can sit and wait for the market to come to you. This is a beautiful house. I might go write a check today. All right. Nothing really going crazy outside of the fact that we're getting close to $12 billion in volume in Santa Clara County. We're still the highest listing count, but Alameda's coming up quick. And let's see what else. Nothing really else to worry about. We sold $341 million worth of real estate last week. It's crazy. And so far this year, we've had over 5,000 homes, but Contra Costa and Alameda are coming up really close. They're only 500 homes away, 500 units away. There's a lot of volume being sold in this area. Not as crazy as it was in 2021, but it is what it is. We have higher interest rates. It makes it more difficult for people to move because if you're at 2% or 2